China didn't roll out a digital currency. It flipped the switch on something far bigger, a $1.2 trillion financial mechanism, engineered not for spectacle, but for silent, systemic change. No press conferences, no headlines. Just the quiet pulse of code executing a strategy that's been unfolding, piece by piece, for more than a decade. While the world watched the usual financial dramas, interest rates, inflation targets, market forecasts, Beijing was doing something else entirely. Not confronting the dollar-based system head-on, but steadily outgrowing it, sidestepping it, and now replacing it. While the global economy still runs on the aging rails of SWIFT and dollar clearances, China has been methodically unplugging itself, not with declarations, but through architecture. Bilateral pacts, custom protocols, programmable money. The ECNY, China's digital yuan, isn't just a pilot project. It's a finished foundation. According to the People's Bank of China, by early 2025 it had already processed over 1.88 trillion yuan, roughly $250 billion, in pilot transactions, stretching across 200 countries and regions. But this isn't about transaction volume. It's about sovereignty, redefined. In this new age, sovereignty doesn't come from borders or flags. It comes from controlling the systems through which money moves. And China is embedding that control everywhere, into global trade corridors, regional payment networks, and even the core layers of other countries' financial systems. The ECNY is more than a currency, it's a protocol. A programmable sovereign alternative to a system long dominated by Western choke points. It's not just fintech with Chinese characteristics. As economist Martin Chorzempa put it, this is the first government-backed alternative to SWIFT and IBAN that actually has the scale, infrastructure, and reach to matter. In 1944, the US dollar was crowned king at Bretton Woods. In 2025, without firing a shot, China may be rewriting that legacy. No battleships, just smart contracts, bilateral swap lines, and digital rails that other economies are already starting to depend on. If the ECNY is China's monetary Manhattan project, then we've only seen the surface. Beneath it lies a sprawling network, a digital web whose threads already run deep through the arteries of global finance. Since 2015, China has signed over 41 currency swap agreements totaling more than $580 billion. These deals don't just facilitate trade, they bypass the dollar entirely, allowing renminbi to flow directly, unimpeded by sanctions, compliance bottlenecks, or Western oversight. By late 2024, nearly 40% of China's trade had already exited the SWIFT system, rerouted through its own cross-border interbank payment system, CIPS, now linked to over 400 banks in 110-plus countries. Imagine oil from Saudi Arabia paid for instantly in yuan, with no dollars, no middlemen, and no delay. Not a hypothetical. It's happening. Kenya bought oil from the UAE in yuan. Argentina, running low on dollars, repaid part of its IMF loan in ECNY. And as the yuan quietly gains momentum, the world's dependence on the dollar is starting to fracture. SWIFT still moves 40 million messages a day, but its grip is weakening. Most visibly in the global south, where economic pragmatism is overtaking political loyalty. The data tells the story. In just 2 years, the yuan's global payment share has jumped from under 2% to 6%. This isn't de-dollarization driven by ideology. It's self-preservation. Because when the dollar becomes a weapon, when access to SWIFT becomes a sanction trigger, countries start looking for alternatives. They're not rejecting the dollar. They're building immunity from its risks. The ECNY offers that immunity. A direct sovereign platform with no Western gatekeepers, no correspondent banking chains, and no exposure to sanctions. Just two nations settling directly under Beijing's digital oversight. But this isn't just about money. It's about control, code, and influence. So what exactly are we watching unfold? Is this decentralization or the rise of a new digital empire? The answer is already playing out in real time. In Indonesia, small businesses now accept ECNY payments through QR codes, skipping dollar conversions altogether. In Malaysia, the central bank has directly linked its real-time payment system with China's, a move once unimaginable. Across ASEAN, over 1/3 of all trade with China now happens in non-dollar currencies. What's emerging isn't a new toolset. It's a new operating system for the global economy. One where China doesn't just participate, it sets the rules. It owns the rails, writes the code, and determines who gets access. As Alicia Garcia Herrero of Natixis warned, China isn't just exporting goods anymore. It's exporting the infrastructure of global finance itself. And the world is starting to log in. It's not just money moving anymore, it's power, coded and exported. Quietly, relentlessly, China is laying rails beneath the global economy, embedding rules inside the very systems that move trillions across borders. And once you run on Chinese rails, autonomy becomes conditional. Because if China controls the rails today, what stops it from controlling the routes tomorrow? Every single day, over $83 billion flows through the Shanghai International Payment System. This isn't some future scenario. It's live. It's programmable. It's no longer a multilateral web of compromises. It's a growing network that can run unilaterally, at will. What it gains in speed, it risks in sovereignty. Because one question now overrides all others. Who holds the kill switch? Late 2023 sent a shockwave through the old order. A cross-border test between Hong Kong and the UAE saw trade invoices cleared in seconds. Cost collapsed by 98%. Not projections, real results. And unlike SWIFT, which merely sends messages, China's digital yuan moves actual value. Instantly. No third-party clearing. No foreign exchange delays. No waiting. Josh Lipsky put it bluntly. China isn't just upgrading the tracks. It's bulldozing the stations, removing the ticket booths, and controlling the entire route. After Russia was cut from SWIFT in 2022, China's system exploded. CIP volume surged over 90%. Not a blip, a signal. Beijing seized the moment, expanding digital yuan swap lines to Brazil, Pakistan, Saudi Arabia, nations boxed in by the dollar. Even U.S. partners like Egypt, Indonesia, and the UAE are now settling trade in yuan. The trend is unmissable. The more Washington weaponizes the dollar, the more the world looks for exits, and Beijing is building the doors. Eswar Prasad doesn't mince words. America's own dominance tools are fueling their replacements. Sanctions don't choke anymore. They catalyze innovation. The next global financial revolution isn't being coded in Manhattan. It's already live in Shanghai, running in Shenzhen, scaling fast. The Belt and Road Initiative laid the groundwork, $1.1 trillion into roads, ports, and power across 148 countries. But today, cement doesn't bind this empire. Code does. Currency does. At Kenya's Mombasa port, Pakistan's Gwadar terminal, and Laos's high-speed rail, payments now clear in ECNY, China's digital yuan. Wallets issued and tracked by the People's Bank of China. Bloomberg reports 13 Belt and Road nations are piloting ECNY settlements. Some are going further. Smart contract-based debt repayments. Programmable, traceable, reversible. This isn't just finance anymore. It's compliance. Automated. Enforced. As Garcia Herrero notes, China doesn't just lend. It dictates. Where funds go, how they're used, when they return. Is this infrastructure, or is it digital colonization? In 2024, at the BRICS summit in Johannesburg, the pieces moved into place. Member states agreed to build a cross-border payment system, powered by central bank digital currencies, with China's ECNY at its heart. 4 central banks are already live in pilot. SWIFT data confirms, yuan usage now exceeds the euro in much of the global south. This isn't collapse, it's controlled fragmentation. By 2026, BRICS aims to launch a unified settlement platform. The dollar's dominance isn't dead, but it's no longer untouchable. The gates are open. The map is redrawing. And in this fragmented world, the real power lies not in who owns the money, but who controls the movement. Then came January 2025. Trump's second term. A fresh trade war, 60% tariffs slapped on all Chinese goods. But Beijing didn't flinch. No counter tariffs. No escalation. Just acceleration. State-owned banks began pushing ECNY deeper into export financing. By Q1 2025, digital yuan use in trade settlements was up 19.3% year over year. ECNY trade credits came cheaper than dollar loans. Letters of credit in yuan cost up to 40 basis points less. Beijing's message was clear. This isn't about winning a trade skirmish. It's about building an economic firewall Washington can't crack. This is no longer a fight over goods. It's a race to write the next global financial operating system. The dollar isn't disappearing, but its monopoly is dying. Its role as gatekeeper is being outpaced, not by policy, but by design. While America debates tariffs and lobbies Congress, China is laying rails under roads, embedding currency into contracts, stitching payment logic into ports, pipelines, power plants, all connected, all programmable, all owned. What's emerging isn't just faster settlement. It's total control, visibility, enforcement, the power to shut off liquidity instantly if a partner steps out of line. So when the next crisis hits, and it will, and liquidity is needed now, not in 3 months, but Washington's help arrives late and slow and politicized, will the world still wait on the dollar? Or will it accept China's terms? Because make no mistake, China isn't preparing to survive the next financial war. It's positioning to win it. Before the first shot is even fired,